Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Happy Friday. Welcome back to another live guest session with the Tech Behind FinTech. Joining me is Mike Gulla. Mike, how are you doing today?
I'm good, Namdi. How are you, man? Thanks so much for having me on.
I'm doing very well, man. No worries at all. Mike is the CEO and co-founder of Adaptive Insurance. We're going to get into the $150 billion insurance blind spot. So it's going to be a very interesting conversation going into InsurTech. I'm really excited for this. I think this actually may be our first episode on InsurTech. So this is going to be a good one, guys. Before we jump into the episode, let me do some housekeeping. We are streaming live from Facebook, LinkedIn, and YouTube. We also have a separate stream going from Instagram. So without further ado, let me introduce my guest. Mike brings 20 plus years of experience to his role leading Adaptive, including integral work at companies such as Hippo Insurance, Allstate, Esurance, Nationwide, and Verisk. As part of his time at Hippo, he spearheaded the first smart home IoT insurance program to help mitigate losses in the home, a product offering now considered table stakes in the home insurance industry. While at Esurance, he led the underwriting development needed for the company's first direct-to-consumer online bindable home insurance quote. Also, now an expected user experience. Mike's knowledge of startups and creative thinking in a regulated industry like insurance positions Adaptive to exceed its goals. He makes Austin his home and Adaptive's headquarters, where he enjoys all things Texas with his family. Mike, welcome to the show, man. I love that.
Thank you. I appreciate the solid intro, man. I feel like I've heard it before.
Nice, man. All things Texas. I have to say, I really love Texas Tex-Mex. Like I was out there a few years ago, and then the barbecue and the different things like that was top notch. It was excellent. I was in Austin, so that was pretty good. So let's get into it. Like I said before, it's our first show on InsurTech. And we're over 200 shows right now. So this is a vertical we haven't really dived into in terms of within FinTech. So I saw the background with the $150 billion blind spot insurance companies are missing. Can you elaborate on that, please?
Yeah, absolutely, man. The $150 billion blind spot is based on a study that was released by the Department of Energy, and that is solely and specifically against just the impact of power outages across the U.S. on businesses and consumers. So when you think about $150 billion in losses every year from power outages are caused across the U.S., of those losses, about 60% of those losses are covered by traditional insurance policies, and about 40% typically go completely uncovered, where either the business and or consumer has no coverage that protects them against those style of outages that happen. And when you think of the impacts of what we've seen with climate, the impacts that you see with the new technologies that are coming along with AI, machine learning, all these different things that are just sucking way more energy off the power grid every single day, you're going to continue to see that curve climb over time. And it was something for us that kind of piqued our interest, especially mine with a background in insurance, on ways that we can actually drive new style products and bring new ideas and new things to the market that can actually have an impact and a financial impact for the end consumer, which is what kind of led to Adaptive, which I'm sure we'll get into.
100%, and I was doing my research on this topic and reading some press releases that your company released. It's one in particular, and it aligned with what you just said. Power grid failures have become increasingly frequent. 80% of the 1,755 major outages in the U.S. since 2000 have been weather-related. According to FEMA, businesses that close just for 5 days due to such events have a 90% chance of never reopening. It's a huge number, man. 90.
It is. And what's really interesting about those numbers is when you think of power outages and you think of mass scale power outages, like big events, like what happened last year with Hurricane Helene on the East Coast and Hurricane Milton, right? Really large hurricanes that kind of roll through. They're not actually the more significant driver of power outages across the US. So when we talk about weather impacting the power grid and all of these increases, and people think of FEMA, their mind automatically goes to catastrophic losses, like this huge event. What we found as we started to research and we started to access our data and we started to build our models and understand what was really taking place with the power grid was the shorter duration power outages. So think of less than 24 hours. If you ask the average American to think about the longest power outage they ever had, it's usually not 3 or 4 days, right? Most people, there was a thunder and lightning storm, a transformer blew, I had no power for 4 or 5 hours, maybe 6 or 7 hours if it's a longer event. So what we saw is that the power outages were actually impacting on a much shorter duration, less than 24 hours. And then as we started to research the coverage availability in the insurance space of like why a lot of these outages aren't actually covered in traditional policies is because they have a longer cutoff. So most insurance policies have what they call as a 24-hour or a 72-hour limit, meaning the power has to be off for 24 hours and or 72 hours consecutively before any coverage would actually kick in for that type of outage. And when you see that in the actual numbers, right, the percentage of outages that last more than 72 hours is less than 0.5% of all the outages that typically occur on a yearly basis, because it's usually not catastrophes, right? The catastrophes happen all at once in a very small period of time, usually in areas that are more suited to actually fix the grid pretty quick after those events happen, right? Because they happen all the time. Like they happen more frequently, not all the time, but they happen more frequently.
But that's interesting. So, essentially what you're saying is with the current coverage, basic coverage most businesses have, the power has to be down for at least 24 to 72 hours, depending obviously on those details. But if anything under that, then they're not protected.
Yep. And the second piece of that's even more interesting when you think of just traditional insurance products and how those products work is they typically have to sustain damage because of that outage, right? They have to have some level of a physical loss against their business for the coverage to ultimately kick in. And that's one of the things, and I know that we'll obviously dive into this on the podcast today around parametric insurance and why at Adaptive we focused on building a parametric insurance product so that we could take some of the values of that parametric product that make it easier for the business to access those finances quickly after a loss occurs so that they can make better financial decisions for their business.
Obviously for the show, I did my research, but can you really explain to people what parametric insurance is? Because most people don't really know. I didn't know the concept, yes, the term, no, until preparing for this show. So can you elaborate?
Absolutely, man. Absolutely. It's funny, parametric insurance has been around for a long time, right? It's been in the insurance space for a very long time. Traditionally, you see parametric insurance show up on, agribusiness and the agricultural space and things like that, because the value of a parametric product is it's a trigger-based insurance product, right? So if you wanted to buy a policy from us in AMD and we wanted to set up a parametric product for you, the main point of that product is to set the parametric trigger. So in our case, it's a power outage, right? So the trigger point is actually based on how long the power is down. Let's say you bought a 12-hour power outage policy from Adaptive. That is the actual trigger mechanism. The power goes down for 12 hours. Once it hits that 12 hours, that is the parametric trigger. Once that trigger happens, we will have already agreed on a predefined amount of coverage that you wanted to purchase for your business. Maybe it was 10,000, maybe it was 20,000. You as the business owner would make that determination of how much coverage you would need if your business had to shut down for a 12-hour period and you had to close your doors for a day. How much money do you stand to lose from a revenue perspective? And you would buy that amount of coverage. And the value of a parametric product is, unlike a traditional claims process where you now have to file a claim, show the financial loss, do all these different things where I have to send an adjuster out. In a parametric situation, when the trigger event happens, I'm the one as the insurer now monitoring the power grid. It has nothing to do with you. I have the third-party data access. I'm the one tracking the sources that are telling me what's going on with the power. So I actually know the event happens usually before you even know the event happens because I'm tracking it in real time. So now when there's a claim event, I'm actually filing and opening the claim and proactively coming to you as my customer saying the power was down. It exceeded the parametric trigger. You bought a $10,000 policy limit. I'm going to now make payment to you within 24 to 48 hours after that event happened. And I want to get you access to that capital as fast as I can. So a parametric product just offers you a totally different experience than you would get from a traditional product. And the best part about it that I'm actually most excited about from a consumer's level is you as the business owner, right, get access to those funds, and you get to actually choose how you use those funds for your business. Because you didn't have physical damage, right? I'm not telling you got to replace your roof because a tornado came through or a hailstorm happened, right? You had a business interruption, so you lost revenue for your business. So now I'm going to make that revenue up for you through that parametric product, and you as the business owner are going to decide how you want to use those funds to actually make up that revenue. Maybe you pay your employees, maybe you lost food product because you were a restaurant and you're going to replace it. Just gives you an opportunity to use it the way that you as the business owner see fit, which from our perspective, I actually feel like that's a better transactional experience for you because I don't know your business as well as you know your business. You should be making that decision, not me.
So that's a lot. So let's dive into it. Number one, you said before we do, so for everyone, parametric insurance, it's based on a specific event, and then that's what triggers it.
Yep.
So to understand that even more now, you're monitoring the power grid. So what if my business has parametric insurance, but I have a backup generator? Like, do you have anything monitoring the actual business itself, like some sort of IoT device, something there that you know if my power is out and I didn't restore it for X amount of time?
Yeah, that's a really, really good question. And the answer is actually a little bit simpler than you would think. I honestly it doesn't really matter to me whether or not you physically have a generator at your location, because the way our product works is Grid Protect is actually looking at the power grid. So the insurance policy that you're buying from a parametric perspective is actually based on the likelihood that the utility company's power that is being provided to your business is interrupted. So if you have a backup generator and that backup generator comes on, I'll use a restaurant as an example, right? If all of Austin lost its power in an hour from now, and you're the one restaurant downtown that has a backup generator, it's great that you've invested in that technology. You're probably not going to have any food spoilage because you had a backup generator that kept your refrigerators running, so your product's good. But most consumers aren't going to think that Namdi's restaurant has a backup generator, so I'm going to go to his restaurant in Austin to get lunch right now because the whole city's down. So you still had a business interruption. So the way we've built our product is based against the power grid, not the individual location. I need to know your individual location. I need to know your revenue. But the whole idea is getting you access to that capital after you have that financial loss. Because even if you have that backup, you're still going to have some level of a financial loss for your business. So I love you as a customer that you're thinking about protecting yourself and you're investing in the things that you need to protect yourself. But ultimately, as a business owner, you're still going to have some level of financial loss that Adaptive can help you with our product.
I understand that. So, and you strictly for this parametric insurance is strictly based on power outages.
It is. So
that.
Yeah, so this is our first product, right? So Adaptive as a whole, obviously, we're focused on building a number of different parametric products that we can bring to market that will, make it easier for different businesses and consumers to access the financial resilience that they need in the face of an ever-changing climate, right? The whole idea is using that model around parametric products. Grid Protect has been in the works for a long time. It is our first product that we are taking to market, and it is solely and specifically built to focus on power outages.
All right. You mentioned restaurants. What other businesses are vulnerable to power outages?
Yeah, it's a great. What's really funny, man, is when we started off, it was heavily around retail hospitality, right? In our minds, it was restaurants are going to want this policy and retail shops are going to want this policy, right? Because if the power goes down and I can't go into a store and buy clothing or I can't buy groceries, like those are the customers. And then we started to have conversations with businesses. We started to have conversations with insurance agents. And then an insurance agency one day was like, well, I would actually like this coverage for my office, because if I lose power and I have to send all my agents home and nobody's working, like I lost a day of revenue as well. So then we started thinking of the business aspect of like small businesses, like you think in the, beyond the hospitality space of insurance agency owners, lawyers' offices, physicians' offices, small grocery stores, gas stations, car washes. So we started to think of this in a more holistic light, and it really became any business that is physically dealing with consumers that requires power, which is the majority of small businesses across the US, actually are constantly at risk of losing power and them having to shut their business down for that day. Right. So it really, really grew very quickly from being very focused on retail hospitality to all of a sudden we have all of these different opportunities within the small business space. So, from our perspective, we view every small business as a potential customer that could benefit from the coverages that we're creating.
It's interesting you said that, because when I asked these questions, I had to have an answer in my head, and I thought you would definitely go into farming. And it wouldn't even, that's initially off the back what I thought, because, they're impacted by weather related issues with their crops and different things like that. So is that a business that you have worked with or plan to?
Yeah, so it's a business sector that we've looked at, right?
Yeah.
And one of the things that we focused on when I actually joined Adaptive a little over a year ago, and we focused on kind of what the vision of the company was going to be and how we were going to focus on helping consumers. There's companies already that provide parametric products to farm and ag, right? That's probably the business that has been most suited for it. You also have other business lines like manufacturing companies and data centers and other things like that that could benefit from an outage product. But those companies are already investing millions and millions of dollars into backup power and making sure, because their entire business is based on that one thing. So what our focus is actually how do we use the value of a parametric product like we're trying to build and actually bring it down to a consumer level so that a mom and pop coffee shop in downtown Austin, right, or a restaurant in Southern Jersey that's owned by a husband and wife and has been in the family for 20 years, how do we help them make sure that they can access new style insurance products that can provide value and allow them to build better financial resilience as not just climate, but everything else associated with climate that can ultimately impact their business, becomes a bigger issue. So that was the focus point for us. So it's not that we don't look at those other businesses. Of course, we could potentially target those businesses, but for us right now, we are much more heavily focused on building this out in the SMB space and taking it to the small businesses of America first.
I conceptually, a few years ago, with the Cloud Security Alliance, I was doing some research on one of the subgroups around autonomous companies, but using the blockchain. So how you would do it is you have this thing called a smart contract that runs on the blockchain, and it basically is a, lack of better words, is a program that runs, and it could be connected to some outside data source, and when that something triggers and something else happens. And as you were talking, we were looking at it like for similar to that, like, if a weather related issue happens, and let's say you are a farmer or someone that has a business that is heavily dependent on the weather, then as soon as the data source, like you're mentioning, hits that, okay, this event triggered, it's a catastrophic hurricane or whatever, automatically you get a payout. So it was like, we're doing research about that back in I think I was 2020, 2021 or so.
Yeah.
So it's interesting having this conversation with you, because with what you're describing, it doesn't sound like a phone call is needed. It's like, it's an equation, right? If X is equal to Y, then do that. Like, it was a power outages, your data source is only the grid. Is there additional data sources that you leverage?
Yeah, we actually have a number of different data sources that we leverage, because there's two sides to the equation, right? The first part is the power, right? What is going on with the power? What has been going on with the power, right? Just pure how actuarial sciences work, right? You have to start your rates based on a statistical analysis of kind of what's happened up to this point. The interesting thing with the power grid, and when you think of all the investments that are made into green energy and new technologies, The grid is changing every single day, right? You have all of these new impacts to the power grid through renewable energies and new investments from the power company. And you have, different companies like Amazon and Microsoft and Google that are building these data centers, that are building their own battery farms and solar farms and other things to power these things. So for us, we have the electricity component of this, right? What is going on with the grid? What are the investments being made into the grid? What areas of the grid are really, really resilient? And what areas of the grid are not so resilient, where there's not being a lot of investment being made? And we know there's going to be more outages as that curve continues to increase. Then the second piece becomes more around the consumer and the weather, right? So what is happening with climate at the location of your restaurant versus the location of my restaurant, right? What is going on with the power grid associated with the weather, right? Was that event something that caused the power outage, or did the power outage occur from something else, right? So we have a number of different data sources that overlay on our back end that we're constantly coordinating against to make sure when a power outage actually happens, what was the reason? Was it weather related? Was it a car accident that hit a telephone pole and knocked the power down because they hit a transformer? Or was there a big heat wave that hit southern Texas and it overloaded the grid and it blew a substation and then it created a cascading outage? We have a number of different dynamics within our platform that will constantly monitor those things so that we can make faster decisions, right? Instant payments and insurance is a hard thing to do because of the way insurance works. We say that we want to make payments within 2 to 4 business days, which is obviously exponentially faster than the average, 2 to 4 months that happens on a traditional policy. And a lot of that is able to be done based on the technology that we're using and the data sources that we're able to overlay on our back end every day.
So real world example, right? We just heard about all the fires in California, affected businesses, homes, so forth.
Yep.
How adaptive would have played out in that scenario?
So we would have known about it instantly. So there's 2 things that happened in that scenario, right? You have what's called an intentional shutdown of the power grid. In some cases, that's typically when a red flag warning happens, which usually means that there's extreme fire conditions in a specific area. This happens in California all the time during fire season, right? And ever since PG&E, had a very bad mishap with the campfire in Paradise, which obviously led to a horrific event that impacted so many lives and people, the power companies will shut the utility power down in an effort to prevent lines from breaking and starting a wildfire. Those are intentional shutdowns of the grid. Our product isn't designed for intentional shutdowns of the grid, right? That's not weather related in the sense of somebody made a decision to shut off the power. It wasn't a natural event that shut off the power. You see that a lot with those events. Now, what the wildfires ended up doing in Southern California in some areas is you have substations that burn, you have power stations that burn, you have other things that ultimately can, catch on fire that can impact the grid. Those are types of things that we're constantly monitoring through our utility providers and understanding exactly what happened. Was this due to a fire? Was this due to an intentional outage? Was it due to maintenance? Were they shutting it down because something was going on in the area and they had to upgrade power lines, right? This is the whole idea of us being able to understand what's going on with the grid in real time always, so that we can make a more informed decision, but also can help our customer understand what's going on with the power grid, right? If I know the utility company is going to shut the grid down tomorrow because of an event, there's a good chance my customer doesn't know that's happening because they're not usually tracking those things. So how can I proactively let my restaurant customer know that, hey, there is a planned utility outage in your area tomorrow from noon until 6 o'clock for maintenance, or due to this weather event that's occurring, they're going to shut the power off for the next 48 hours. You need to plan your business accordingly to know when that's going to happen. So it's multifold. It's not just about the product experience. It's also about the experience that we can give by leveraging our data platform to provide other services to our customers.
I want to dive into that, right? The intentional shutdown portion, right?
Yeah.
So, it seems to be a proactive approach by the power company to shut down, but that doesn't trigger the parametric insurance.
Correct. We're actually not launching in California initially, just because there's a lot of volatility, obviously, with the wildfires and things going on in the California market. But we'll use that as an example, right? Because it is something that occurs. The utility shutting the power down obviously has a number of different impacts of why they do that, right? One, they're trying to prevent a wildfire from ultimately happening. And typically, when you have a red flag event in a place like California, when you have a red flag event, it means that the conditions for a wildfire are at the most perfect combination for a wildfire to start. One of the things that typically is one of those conditions is high wind speeds. When you have high wind speeds, that blows trees over. Those trees typically take down power lines. And if it's a live power line, that power line can arc, and that will likely start a wildfire. This is likely what occurred in a lot of the wildfires that we've seen over in California over the years. So the utility companies now proactively can shut the power down. The problem that you have with that now is you have a person making a decision of an event taking place, right? On any kind of insurance policy across the entire spectrum, right? You always have these issues where you have certain event types where, you know, you can't price against somebody making an arbitrary decision that they're going to turn something off or turn something on, right? So typically you would have an exclusion in a policy that would ultimately prevent that from taking place. In our case, whenever we have an instance like that, where it's something that we can't actually provide coverage for because it can't be priced, we still see that as a value opportunity for us to be able to inform the customer better of what's going to take place.
What I want to understand is how does, because if these things are automated, how does the platform know the difference between someone intentionally shutting it down or being weather related shutdown?
Yeah, it's usually an issue. Like it's usually a known thing. If the utility is going to intentionally shut the grid down, it's usually known, right? Because it's going to have a major impact. Like think about, you know, if Edison decides they're going to shut the power off to LA County because of a red flag event, and all of a sudden you're going to have 4 million people that lose their power tomorrow. Like it's not something that's hidden. Like it's a known thing. You can track it. We get a number of different updates from a number of different sources that we ultimately monitor. We also monitor social media to understand what's going on that people are posting on different social media sites that we can make decisions on in real time. But again, it gets back to how can I create a different experience for a customer, right? Like while we're on this topic, Namdi, I'll use the California one as an example. If I know from my data likely how often the utility company is going to intentionally shut the power down, right? Like we have models that will tell us typically how many red flags are going to happen in California in this year based on the predictions of what the weather is going to do over the next 12 months, right? How many droughts are there going to be? How hot is the season going to get? How likely are the fire conditions going to meet that? So if I can go to a restaurant customer and proactively tell them that, yes, this is going to happen and this is something you cannot buy insurance coverage to protect you against. So you need to make sure that you're protecting your business about the 25% likelihood that this is going to happen to you over the next 12 months, at least once, right? How do you help prepare for that? And how can I help you prepare for that? That type of customer, to your point earlier about a generator, should absolutely invest in having some sort of backup electrical power because they know they're going to have outages every single year that are not going to be covered. And they're going to have other things that impact their business that could likely occur from that. So then it just becomes how do we create a better experience for that consumer to make sure that they're getting access to the tools that they need to protect themselves, even if it's not through an insurance payout, it's through a proactive mitigation step that they can take to help protect their business better.
And that now, a question that I have, right? Because we've seen situations, I mean, we're in California, but as an example, where, you know, due to the occurrence of certain disasters over a set period of time, you see insurance companies literally pulling out of that region, right? Yeah. How does that play out for parametric solution providers like yourself? Do you see examples of that, or do you like how does that process work?
Yeah, it's a good question, man. I would say it's somewhat unknown, right? Because parametric coverage is still relatively new at the scale and at the size of business that we're ultimately going after. I would say that the biggest difference between what Adaptive is trying to do and what you see with companies like Allstate, State Farm, and other companies that have to make much bigger decisions is their exposure in those areas is extreme. So the difference for a parametric company is it's much easier for me to monitor through my data and through my technology the overall exposure that we have. Like one of the goals of Adaptive and what we've built in our platform is making sure that we don't get overexposed in any specific area, right? So as we're growing and we hit certain points, we don't ever want to be overexposed in any specific area. This is any insurance company's goal, right? No insurance company wants 100% of risk in one area where they know they can have a certain loss that can hit them super hard, right? And you see this in areas that are very cat prone like California, because companies like Allstate, State Farm, Farmers, the California Fair Plan, they have a very high density of customers in an area that's very prone to a loss type that can significantly impact their overall book. Parametric products are much smaller, right? Our coverage limits are less than $50,000 in coverage. I'm not taking a $2.5 million home in the hills of Hollywood that I'm taking a risk on, right? It's a much, much smaller portion. So when you think about the dynamic of that, you can have a higher frequency as long as the severity is much lower. When you see companies pull out, it's when they have a high frequency and an extremely high severity, and then they just can't make those funds back up. And then you see them pull out of areas. I feel like what we see is that Parametric is actually going to help those companies diversify their risk a bit more. We're not going to take a huge portion of the risk, but we are going to allow them to actually seed off some of that risk, because we're creating a new product type that's going to enter into some of these markets that will create new opportunities for the customer to actually invest in some different products than the traditional ones that they've been so used to buying for so long.
Insurance perspective, because you just said like you mitigate your risk across different geographic regions. So how does that work? Once you get a certain amount of customers in a certain region, you just stop offering that solution?
Yeah, so it depends. It depends on where you are, and it depends on what state you're in, and it depends on the way that your company is growing. Ideally, in a perfect world, you're diversifying your portfolio as you grow your book of business, right? So instead of saying like, I'm going to launch Texas, right? I don't want to launch just Texas. I want to launch Texas and 5 or 6 other states that are diversified across the US, so that if a major event happens in Texas, I can offset some of those losses by being able to insure risks in other states. So for us, a lot of our growth trajectory and the way that we're growing Adaptive is really around making sure that we get good spread of risk and we get good diversification. At some point, of course, you're going to run out of capacity, right? Like we only have so much reinsurance capacity and so much partner capacity to put into the market. When that ends up being full, can we go back and get more? Potentially. But the only way we're going to get more coverage is making sure that we've actually diversified our portfolio the right way and made sure that we wrote policies in multiple areas. And this was one of the things for me on the Power product that was super interesting as a career insurance underwriter. When I was writing home insurance in my past, right, you typically get a very high concentration of risks in areas. And when an agent finds a new company, they write a whole bunch of risk because those people are really fearful of that one thing in that one area. Power impacts everybody everywhere in the country, right? Every single property in the United States is at risk of a power outage at any given second of any given day, right? So when you think about the ability to sell that product, I can sell it the same way in New York as I can in Texas, as I could in Florida. Now, some of those states that have more catastrophes are going to be a little bit more fearful of it. But at the same time, those states are also more apt at going in and fixing the grid after those events happen because they're more used to it, right? So their speed's a little bit different. So it just depends, man. It really, really just depends.
You see specific regions where there's an urgent need for parametric insurance for power? Like what regions in the United States is like this thing is like urgent? Because you mentioned a couple of different states, but I want to kind of hear from you.
Yeah, so I don't know that I would use the word urgency, right? Like it's a tough one for me because as a career underwriter in the insurance space, like I don't like to sell insurance as a fear-based product, right? I've spent my entire career for 20 plus years working in the insurance industry. And it's an incredible, incredible group of people that do really good work to try to make sure that consumers are protected, regardless of what happens in the news. Like there's always bad scenarios and bad things that happen, but inherently, like the insurance industry has existed as long as it has because it provides a value that everybody needs. If you think about your daily life, everything you do in your life is touched by insurance in some way. You don't drive a car without insurance. You don't own a home without insurance. You don't have a job without that company having insurance, right? So for me, I never like to sell fear. The thing about power that we like to sell to people is the resiliency of the grid has not gotten any better over the last 15 years, right? It gets worse every year because we have more people, we're consuming more power. AI and machine learning and all these new models that are out now are consuming way more power. There's a whole bunch of studies that show, how much a chat GPT search consumes. I forget what the number, it's like 7x the amount of power that it takes to run just a normal Google search, because it's searching much more stuff at one time. I would actually say there are parts of the US grid that are much less resilient, that are very, very hard to even provide a product to, just because of the amount of outages that they have. And a lot of that has to do with investment. There's a whole bunch of different things behind the scenes that can happen with utilities, right? It's a very fragmented industry. The utility company at the end of the day wants to keep power on as much as they possibly can, right? Because when the power's off, they're losing money. They don't make money when the power's off. So their incentive is to keep the power on. Our incentive is to make sure that we're helping the consumer understand what their risk is and make a value-based decision on the product that they're going to buy to protect their business. And then we'll fluctuate that coverage to make sure that it meets the actual need that business has.
I want to get into two things that you mentioned, because I'm curious about that. I want to get into reinsurance, and I want to get into the idea of selling insurance fear-based versus alternative. Before we get into it, we're going to take a second from our sponsors, and then we're going to jump right back into the show.
Awesome.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on On-Demand CISO to connect with an expert.
I just like that. We're back. So I want to get into first the reinsurance aspect, as you mentioned, and essentially who insures the insurance company. Like, can you explain to the audience how reinsurance works?
Yeah, I mean, it's essentially the backstop to insurance, right? You think about the spread of risk, as I was just talking about, and the way that works. The reinsurance industry is obviously a massively huge global network of groups that is essentially spreading their risk around all over the globe, right? And the large reinsurers typically take portions of risk on all kinds of different products so that they're getting diversification. But typically you'll see, even in a traditional sense, I'll use a main like national carrier in the US, like an Allstate, right? Allstate has a very large balance sheet, so they can keep a majority of the risk that they're taking because they have the financial resources to do that. But when a catastrophic event happens that all of a sudden shocks their book with this massive multi-billion-dollar loss, typically you will have reinsurance set up behind you that will come in for those types of events. So it's a backstop. Once it crosses a certain threshold, that group will ultimately come in and provide, different levels of reinsurance. You also have in the, in the smaller space where you could have a carrier partner that's like your underwriting partner that's taking a portion of risk, where they like your program, but they don't want to take 100% of the risk because they don't know enough about it. So then you can go out and you can get reinsurers to come in behind it, where everybody will take a portion of the risk, right? And you set up a reinsurance treaty, and now you have multiple reinsurers and everybody's just taking a portion of the risk so that nobody's getting overexposed on it. If something happens, it's kind of spread out across a number of different groups. Reinsurance is a required necessity, I think, in the insurance space and what they do and how they help backstop a lot of these losses. But at the same time, when we think about the impacts of climate and the impacts of what's going on globally with all these different networks, right? Reinsurance dollars become very, very hard to get. It's very difficult to get reinsurers to back new programs because they've taken some massive shock losses on some of these catastrophic events that we've seen globally, not just in the US market, but all across the world, which just makes the conversations harder to get them to buy into new programs, and they stick with what they know and cover the stuff that they like and that they're good at underwriting.
No, thanks for that and that explanation. And you mentioned climate change. you have access to tons of data. I mean, as an insurance company in this field, tons and tons of data. What are you seeing with climate change and the impact? Because from the outside looking in, it looks like the risk vulnerability, right, especially to insurance industry, is huge. What are you seeing from the data?
Yeah, so I'll give you my personal perspective on this, right? Because you can go so many different ways when you talk about climate change. It's a hot button topic, right? And everybody has their opinion. I take it down to the consumer. Forget about all the reasons that climate has changed, where it happened from, why it happened from. If you are investing in purchasing a house as an American, right, this is likely going to be the largest investment that you've ever made in your entire life. It should be on you to actually invest in understanding what are the things that are going to impact you as a homeowner where you live. I live in Texas. We get hailstorms, we get tornadoes, we get high winds, we get hurricanes, we get all kinds of different things here. Wildfires still happen here in Texas. I educated myself on understanding where my home was going to be and what are the things that are ultimately going to be most risky to me, and how can I invest into creating resilience to protect my property and protect my assets. There is zero doubt in my mind that there are impacts of climate, especially on the insurance sector. But the reasons that happen is a combination of things, Namdi. It's not just the changes in the weather, it's the changes in migration patterns, it's the changes in where people have decided to move. Right? If you look at where people now build their houses in coastal areas and areas that are very prone to weather events that have happened for many, many years, those same weather events are still happening. Sometimes they're in greater magnitude, right? The hurricanes might blow harder and the tornadoes might be a bit larger, but the number of consumers that are now exposed in that area has exponentially risen over the last 25 years because of how people have moved around the country and ultimately around the world. So you're going to see arguments from both sides because there are valid reasons to say that, yes, we see more billion-dollar disasters now because more people have built more expensive properties in areas that are more prone to get hit with these climate losses. And on the flip side, you also see that the storms are stronger. Sometimes they last longer. They're happening more frequently. So it's kind of a give and take. So for me, the easiest thing that we can do is get people to understand that it's happening. It's very hard for an individual consumer to have realistic impact on what's going on with the climate. But the thing that you do control is how you protect your property. How do you invest in your own property? And how do you make sure that you know what you're exposed to so that you can make those proper investments when you need to?
No, that's a good take. I'm one of my side hobbies is real estate, more from an investment standpoint, but knock on wood, but I really like the Northeast in terms of how, we get hit with stuff, but it's not as crazy as, I don't know, Florida, the hurricane, something like that.
So I'll tell you a quick funny story, man. When my wife and I used to do real estate a long time ago, and when we were in real estate school to get our appraisal licenses, we were in upstate New York at the time. And I remember our appraisal school teacher telling us about a catastrophic event that's always studied is a hurricane hitting Jersey. Right? You get a Cat 4 hurricane makes landfall in Jersey. And it was the scenario that we studied back in 2004 was essentially Hurricane Sandy, right? Superstorm Sandy, exactly what happened. And Sandy could have been exponentially worse, like a tiny little wiggle, and that storm would have been one of the most catastrophic things that ever happened in the US. So even when you think back that far, right, you're talking 21 years ago, like people still knew that like this type of thing can happen. It's not like the events that are occurring today are unknown and people don't know how to plan for them. We know how to build a house so that it could sustain a Cat 5 hurricane. You've seen it in Florida. There's guidelines that have been put out by the insurance industry on how to protect your property. Same thing against earthquakes, right? You could protect your home against an earthquake. You could prevent your house from burning down in a wildfire. There's plenty of information on how to do it. The cost of investing into doing those things, though, is prohibitive for most people, right? Most Americans don't have 40 grand sitting in their bank account that they can say, yeah, I'm going to replace my wooden shingle roof with something that's more fire resistant so that my house doesn't burn down. They're going to take the bet of, I hope a wildfire never happens so that my house never burns down. I'm not going to invest the money. And that's why I say it's really a consumer level issue of them understanding what their risk is and where they want to invest and how they want to protect themselves. Because at the end of the day, like, it's not going to get better, right? Like, I don't see it happening where the weather is going to be less extreme anytime in the near future.
That's a good point. Something else you said that I want to touch base on is from the consumer's aspect. And listen, it's you're not selling fair per se, right? But I really want to understand how do you position that? Because at the end of the day, life insurance, all right, you're thinking about it from a perspective of eventually, if everyone born is eventually going to die, and then it's okay. How are the ones that I'm leaving behind protected? Home insurance, like you just said, right? You have a house. It's one of the biggest investments most people make in the United States. If something were to happen, like in California, the wildfire, how do I protect this asset? Deep down, a lot of it is fear that said thing's going to happen, right?
Yep.
How do you position it if you're not selling fair?
Yeah, so this is part of the reason why Adaptive focused on small businesses out of the gate and not consumers. And I'll give you an explanation of what I mean by that. If I give a homeowner money to invest into their house, right, free and clear, as an insurance company, if I gave you 10 grand to spend on your house and said, spend it on whatever you want to protect your property, my fear there would be that the majority of Americans are going to buy a new couch or a new flat screen or a new refrigerator. They're not going to put it into their roof. So when we started looking at consumer businesses, they care about one thing and one thing only. How do I make my revenue so that I can pay my employees and I can keep my doors open? So from Adaptive's perspective, now that is a different style conversation, because it's not about me selling you an insurance product saying, you own a business, you need a business owner's policy, because if Mike Gulla walks in and slips on your floor, he's going to sue you and he's going to make you go out of business because of this lawsuit, or your cook is going to leave the fryer on tonight and they're going to burn your business down. That's what insurance is meant for from a traditional insurance product standpoint. That's why those products exist. That's why they've been used for so long. For us, it's how do I go to a business and actually help them understand, Namdi, let's assume you own a restaurant in South Jersey, and I say, what is your revenue if you lose your revenue for a full day on your busiest day of the week? And you say it's $10,000. How do you make that up? You will likely, as a business owner, know what that means. I'm likely going to have to make up a bigger percentage of what I lost. Let's call it 10% per day over the next 10 days for me to make up that one day of revenue that I lost 10 days ago. So now for me as an agent, I'm now telling you, look, I have this product that if the power goes down for 12 hours, and that's what the trigger point you bought, you lost $10,000. They're going to make that back up to you within 24 to 48 hours after that event occurs. You get access to those funds and you get to use those funds for your business. It's a different business transaction than selling a traditional insurance product. And that's the piece for us with Parametric that I'm more excited about is consumers have never had an opportunity to buy insurance products that could drive more financial resilience and more value for them on that front, right? Because it's always been, you buy a house, you got to get an insurance policy to get your mortgage. You buy a car, you got to buy an insurance policy so you can legally drive the car. We're trying to change that kind of dynamic of how do I use our data? How do I use our platform? How do I create a relationship with you as a business owner so that we're driving more value through better opportunity through these style of products that we're ultimately building.
That's interesting. I want to switch gears. I want to kind of dive into in our last couple of minutes. For the audience, every guest that we bring on, we send them a guest form, and they inform us with different. We have different questions around leadership, background, and so forth. One of the things that we have in common on your form, you mentioned Jocko Willink, he's a Navy SEAL, it's a podcast. And it's a concept of extreme ownership, right? Yeah. And I know that. How does that impact your leadership style?
Yeah. So for me, man, it's at a startup especially, and I've had the opportunity to work for very large organizations, right? Nationwide, Allstate are huge organizations. When I joined Hippo, I was the 8th employee. When I started at Adaptive, I was the only employee, right? So for me, when I look at extreme ownership, it's really extreme ownership of everything that we're doing. Right. As the CEO, I feel it's my responsibility to know enough about every single thing that's going on in the company right now to make sure that I can empower our team to do their jobs well and make sure that they have the resources that they need for us. But from my perspective, and I always like the way that Jocko and his team have talked about like the leadership style of just owning things. Right. At a startup, like you're going to trip and fall all the time. Right. That's what you do on a daily basis. You iterate and you understand. And the faster you can own up to when something works and when something doesn't it lets you move forward much, much quicker. And when you enable your team to feel comfortable to operate that way, and we have an incredible group of individuals. I was lucky enough to bring in folks that I've worked with in the past and people that I trust that are the best at what they do. It just makes being able to have extreme ownership to my board and to our investors just so much easier to do, because I trust that everybody behind me is doing what they're supposed to do every day to make sure that we're successful in what we're doing as a company.
I love it. And I think that's a good segue to conclude the show, because I love leaving on those type of notes. Mike, what we do at the end of every episode is we give our guests the platform to talk about how people can find you, anything that you want to talk about regarding adaptive or so forth. So I'm going to step off stage and let you do that.
Yeah, thanks, man. I will tell people, if you haven't, please visit us at adaptiveinsurance.com. We are getting ready to launch in a number of different states across the U.S. We're excited about the products that we're building. We're happy to get on the phone and talk to people about needs that they have. Obviously, we're an innovative company and we're looking to build new products. So if you're a business owner and you have needs and you want to talk to us about things that we could do that might be able to help you, by all means, like I said, reach out. We're here to help. We're here to stay, and we're really excited about what we're building and what we're bringing to the market. And it's been an honor to be on here with you today, man. It was a really good podcast, great conversation, and excited to see the feedback from folks in the market.
No, that's great, Mike, and I thank you for being a guest. Before we leave, I want to talk to everyone. I was talking to Mike about it prior to the show starting. So under the Tech Behind FinTech, you guys are used to our weekly shows. That will continue in perpetuity. We are not stopping that. But what we will be doing is adding additional content and additional programming. One of the things I want to talk to you about is an upcoming show that we're starting called Sweating Equity. And if you're familiar with Tech Behind FinTech, you know, we talk about this particular topics. Like today, we just learned about InsurTech, what Mike is doing with Parametric insurance and so forth. So it's more educational. Sweating Equity is going to be focused on our guests and their journey to where they're at in their career, things that they went through and so forth. So it's more of a personal deep dive into our guests. But here's the caveat. The reason it's called Sweating Equity is because we're going to put them through a grueling style, fighter style workout. As most of you know, I'm into combat sports. I'm a BJJ practitioner, and I work out of an MMA gym here in South Jersey called Web Fitness MMA. So what we'll be doing with our guests, it's not going to be remote. It's going to be in person, and they're going to be working out with me and one of the coaches there. And afterwards, we may do a little bit of grappling. But in between those different circuits, we're going to be asking questions. So it's called Sweating Equity. I'm going to start talking about it every week on the show, just to give you guys a heads up. When we eventually drop it, you'll know that it's coming. So that's my plug for Sweating Equity. Mike, man, great conversation, man.
Man, thank you.
Really learned a lot about parametric insurance. You know, like I said, I knew the concept before, but the term, no, I'm not maybe 100% transparent on that. So, you know, I make a joke on these shows saying that, you know, this show is kind of a selfish way for me to get information from great leaders, great experts like yourself, and people just happen to be watching it. So we've been on a 5-year journey and talked to a lot of very, very interesting guests. I'm going to call you a friend of the show. Anytime something happens in the insurance industry and we want to learn more about it, I'm going to, you know, try to schedule it with your people and get you back here so we can kind of dive into whatever topic that happens. So I'd like to reserve that right. Other than that, man, look, have a great weekend. Once again, thank you for joining. And I say this to my guests all the time, the audience, whether you're watching the show live, whether you're going to watch it tomorrow or next year, we appreciate your viewership. We appreciate the DMs, the questions, the support. We have a newsletter called on Tech Behind FinTech. Let me just put that on, in which we talk about everything FinTech. It's free. And you can have your pulse on FinTech, and we also give you a heads up on our upcoming guests and our previous guests. So it's definitely something that you want to go to. Go to Tech Behind FinTech /subscribe, and you can drop your information there, and then you'll be getting our newsletter, our weekly newsletter. So other than that, Mike, great talking with you today. Thank you very much for your time. Look forward to our further connection, and you take care and have a great day.
Same, brother. Thank you so much. Appreciate it.
Cheers, bro.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.